Rohr here with an early global view on Tuesday, April 7th, 2015. It's currently 7:15 a.m. Coming to you a bit later than usual because we wanted to see all of the U.S. pre-equities opening activity out of the global centers after what were holidays out of last Friday in Europe and the U.S. and right into Monday throughout Asia and Europe and the UK, celebrating either Asian holidays or Easter Monday prior to today's opening. So, what did all this mean to the markets? Well, it doesn't show up on this chart because we track the regular trading hours, which are the equivalent of the pit trading, and that was closed on Friday. But throughout the course of the day on Friday, after opening almost $10 lower on the back of that number we saw on U.S. employment, this market ranged down to test the 2040 area again and settle there on Friday. So even though this looks like a big gap lower and bounce on Monday, in fact, this market had been working its way higher on Monday, especially as the market anticipated and got that somewhat better data in the U.S. on the services PMI. So we went all the way from 2040 on Friday up through 2058 to 60 again on Monday, all the way up to the 2075 to 78 resistance, from which we backed off a bit. Now, so far this morning, the June S&P 500 future is up for right at about 2077. So the market is probing that old 2075 to 78 from all the way back out of November into December. And of course, that's similar to what happened pardon me, in the early part of last week on Monday before it failed. Will this week be a repeat, or will it head higher into resistances like the old 2088.70, which is really 2088 to 90? That was the old all-time high from December, end of the year last year at 2088.70, with extended resistances in the 2100, 2107, and of course the all-time lead contract high up at 2117.30. So there are your supports and resistances, and the one thing we will say is that 30-minute MACD is backed off from above its runaway band, and the 60-minute MACD has maintained itself out above it for now. So any weakness today might speak of a rollover to the downside, especially with both hourly and 30-minute stochastics looking like they've been up and want to possibly roll to the downside, but only if the bears can get this market to respect 2075 to 78 as resistance. And that pretty much does it for the short-term view of the S&P 500 future.